Good morning, trader. Today, nice topic. I put together a complete, ready to use briefing on the long iron butterfly options tailored for US trading. Also, notes on crypto options, plus a voice over script and 3 growth stocks under $40 with current price information, analyst target price information, guidance and short growth notes. Long iron butterfly, a practical step-by-step guide to minimum profit and risk management. Quick definition: a long iron butterfly is a 4-leg option structure. Sell ATM call plus sell ATM put buy OTM call above plus buy OTM put below. That produces a narrow profit zone around the middle strike with defined limit profit and limited loss. When to use it? Use when you expect the underlying to remain close to a Susan price, neutral to slightly directional view. Want defined risk and prepare a trade that benefits from time decay and or falling implied volatility. Step-by-step practical process. Numerical example plus how to get minimum profit. Example setup for teaching only. Replace with live quotes when you trade. Underlining example: $100 middle star short strike price equal $100. Sell one call, sell one put. Lower wing equal $95 by one put. Upper wing equal $105 by one call. Suppose net credit received equal $2 per share. That means $200 per one option contract. This example mirrors the standard equal wing iron butterfly construction and is used for the payoff diagram steps. Market view and expiration. Pick on expiration consistent with your view, e.g. 30 to 45 days. Shorter expiration accelerate time decay but increase gamma risk near expiry. Shoe strikes body plus wings. Select on ATM middle strike body where you expect price to finish, then choose equidistant wings, e.g. plus or minus 5 points. Wings must be equidistant for the classic iron butterfly. Check liquidity. Verify narrow bid or ask thread and open interest on each leg. Avoid illiquidity expiration. Size position. Calculate maximum loss per contract. Distance from short strike to wing minus net credit into 100 size so that maximum loss force you per trade. Risk limit. Executive IJ single multi-leg order if possible to get fair fills and avoid legging risk. Break even points equal middle strike price plus or minus net credit, e.g. $100 plus or minus $2 That's $98 and or $102. Profit if final price is between those break even but maximum profit occurs if final price equal middle strike price. Target minimum profit. Define a conservative exit target, e.g. captures 50 to 75% of maximum potential profit early, because maximum profit is limited to the net credit. Minimum profit is best achieved by planning an early close when a large fraction of the credit remains unrealized. Locking profit and avoiding late gamma risk controls and management. Set alerts for large fourth moves. Pre-planned roll rules, e.g. if underlining moves off the wing distance and absolutely loss exit, e.g. close if trade losses X% of marks maximum risks. Adjustment options. Roll the short body to a different strike or expiry, convert to an iron condor. Widen wings or buy back or close legs to reduce risk but struck additionally transaction costs. Exit. Close when your target profit is hit. When you approach expiry with unfavorable exposure or just before assignment early. Exercise risk if needed. Key math from example. Net credit equal $2, maximum potential profit $200. Contract if underlining it $100 at expiration. Maximum loss per contract wing distance into 100 minus net credit equal $5 into 100 minus $200 equal $300. Break even equal $98 and $102. These formulas follow the standard iron butterfly mechanics. Hello. Today we are building a long iron butterfly low variation option strategy that gives you defined risk and a narrow profit zone. Step 1. Choose an expiration consistent with your market view. 30 to 45 days is a common size. Step 2. Select your body. At the money strike where you expect the stock to finish. This will be the strike. You will sell one call and one put. Step 3. Pick equidistant wings above and below the body. For example, sell the understrike and buy the 105 call and the 95 put. Step 4. Check liquidity and choose strikes with reasonable bid-ask spreads and open interest. Poor fields destroy the edge. Step 5. Establish the trade as a single multi-leg order to avoid legging risk and note the net premium you will receive. Step 6. Calculate your break-even levels, middle strike plus and minus the net credit and compute your maximum profit and maximum loss. Step 7. Set an early exit profit target. A practical rule. Close once you have captured 50 to 75% of the maximum possible profit to lock gains. Step 8. Monitor implied volatility. Falling fourth help the trade. Rising fourth increases risk. Be ready to adjust if fourth spikes. Step 9. Prepare adjustments before you need them. Roll the body, widen wings into an iron condor or close to cut losses. Step 10. Close or manage before expiry if large moves make assignment probability or gamma risk unacceptable. Finally, size every position so the maximum loss is within your risk tolerance, including common commissions and assignment risk, and low keys trade for continuous improvement. Thanks for listening. Download the pay of chart timeline and checklist and keep them with your trading notes. Another one, short trade ideas how to combine with iron butterfly crypto notes equity version. For a stock you expect to stay near current price, low volatility volume view, set the iron butterfly centered on the stock's current price, use the position sizing rules above. Crypto options market easy debit, allow butterflies on BTC and ETH, mechanically identical but implied volatility value tends to be higher and overnight gaps are larger, use wider wings or shorter expiration and tighter risk controls. Minimum profit approach. Prioritize collecting net credit while choosing expiration and wings that give a high probability of profit and a reasonable credit. Then exit early once a present fraction of maximum profit is reached to lock the minimum profit. This is a behavior and rules approach rather than relying on expiration. Another, equity shares, 3 growth stocks under $40. Present price, target price, why they might grow. Also describe. Important, stock prices and analysts targets move every market day. I pulled live is reference for the current prices and consensus targets. Check quotes in your broker before trading. Marathon Digital Holdings Inc. Mara. Bitcoin miner, blockchain infrastructure. Present price is $11.9 per share. Consensus 12 months analyst price target average 23.5, range roughly $13 to $30. Analyst see upside tide to Bitcoin price and miner operational leverage. Market beat, how it can grow. Marathon revenue and earnings are tightly correlated with Bitcoin price and its hash rate efficiency. Growth drivers including higher coin prices, improved mining efficiency, scale increases and access to cheaper renewable power. Watch regularity and BTC price risk closely. Second company, Riot Platforms Inc. Cryptocurrency miner and infrastructure, present price $14 to $16, varies by day, historical traded in teens recently. Consensus 12-month analyst price target average $27. Analyst range including high up to $42. This reflects sensitivity to Bitcoin and expected operational scale gains. How it can grow? Growth comes from increased Bitcoin production, expansion of data center capacity, scale efficiencies, and potential diversification into blockchain services. Again, returns are highly linked to BTC price and network difficulty. Charge point holdings Inc. This is third one or last one. Company price, EV charging network and software. Present price approximately $8 to $10 per share. Recent trading around this area. Analyst consensus 12 months target average $9 to $12 target vary, same recent cut to $9 to $11. How it can grow? Charge point benefits from EV adoptions, utility and fleet charging contracts and software services, network management and subscriptions. Growth depends on EV sales infrastructures, builders and ability to monetize recurring software services. Near-term margin and cash burn remain watch points. Sources and reading. Key references used: Fidelity, long iron butterfly spread details. Investopedia, iron butterfly strategy overview and example. Siboi, iron butterfly index methodology, useful for institutional benchmark. Marathon, price forecast, market beat, investing consensus and historical price. Riot, analyst consensus, historical course. Charge point, CSPT price and recent analyst notes. Risk remainder, short and blunt. Options and leveraged crypto exposures are high risk. This guide is educational, not personalized financial advice. Size positions to money you can afford to loss and check current course and exchange rules before trading. Please like, subscribe and comment. Another video is there, 2 minutes, under 2 minutes video, that is your hot touchable video. Please listen.
The long iron butterfly is an advanced options trading strategy designed to benefit from significant price movements in either direction. It involves setting up 4 options contracts at 3 different strike prices, all with the same expiration date. To implement this strategy, traders select a stock or index with low expected volatility and ensure there is sufficient liquidity in the options market. The structure includes selling 1 at the money call and put, while buying 1 out of the money call and 1 out of the money put. Profit and loss are determined by the net credit received and the width between the outer strike prices, making careful asset selection and risk assessment essential for success in the U.S. market. Let's take a closer look at 3 promising growth stocks currently trading under $40. The first is Company A, a leader in the renewable energy sector, which has achieved a 15% increase in stock price over the past 6 months and has a target price of $45, fueled by expanding market share and supportive government policies. Next is Company B, specializing in electric vehicles, whose stock has risen 20% in the last quarter, with analysts setting a target price of $42 based on rising consumer demand and ongoing technological advancements. Finally, Company C operates in the biotech industry, focusing on innovative treatments, and has seen its stock grow by 10% this year, with a projected target price of $38, driven by successful clinical trials and strategic partnerships. These factors collectively highlight the growth potential of each company within their respective sectors.
Yes!
Comment I will receive you. Creators, please subscribe and grow your channel Google Ads Creators. Crypto and stock surge. Iron Condor breakout. Maximum profit, minimum risk strategy. That is long iron butterfly. Thank you, my dear friends. We will meet tomorrow video. Once again, I will thanks. Please comment whatever you comment. I will positive receive.